Good weekend all. Ira Epstein with your weekend edition of your financial market wrap-up for this Friday, the 11th of October, 2019, the day that the President and China have reached an idea or an agreement in principle on the first phase of trade. Now let me explain what I just said. First phase of trade, there's going to be a minimum of 2 phases to what they try to agree to. Nothing is yet in writing. It'll take 3 to 5 weeks to get there. Parts of the intellectual property issue have been discussed. I don't know what they'll do when they put them on paper. There's a $40 to $50 billion trade deal on agriculture. What that means, what parts of it are in there, what time frame that covers, that has not been answered. Banking sector, the financial sector, there are issues addressed. They claim, I'm talking the two sides, that is very good for everybody. So there was a lot done. Now, is it all going to make it on the paper the way that both sides think? Don't know. China's already calling it a pause in the trade war. Our president is calling it an agreement. I'll let you take it the rest of the way because all weekend long there's going to be talk about it. I've seen the press conference and let's go through the points. This is what I've seen. U.S. and China agreed to a phased approach to the trade agreement. This is phase 1. The writing of it will take, well, they said 4 to 5, and then I saw 3 to 5 weeks. I want you to remember the last time they tried to get anything on paper and agree to it, the whole deal fell apart. There's going to be no increase in the October 15th tariff, but the December 15th is yet to be decided on. That's the pressure to keep things going. The U.S. is calling this a deal. China's calling it a pause. They say, the U.S., we have a currency deal. China says we have guidelines. Then there's the 50 billion purchase of ag. Intellectual property rights, they have not been resolved, but progress is being made on them. There's going to be an elaborate consultation process that they have to agree to. No part of the agreement's going to be signed until this phase 1 is finalized, and that'll be signed. And Huawei was not discussed. Does that answer everything? I hope so. Let's go to the chart action. As you can see on a monthly area of charts, we've gone sideways, but we are holding near these all-time highs. This action is still good. Take out this 2982 and a quarter area. That's been the high monthly close. That's what that represents. That's only 12 points away, and this becomes possibly a pattern of a bottom for a top, for a move higher. This, if you break down and get through back here, the settlement of 27.75, I'm sorry, what price was that? 29.24.75, and you're nowhere near that, but that's 50 points away. You start breaking the pattern down and you might be headed back to that 18-week average. Mouthful, right? When we look at the weekly area chart of closes, this is the weekly. The market had come up and failed up here to get through this 30.24.5. If the market pulls back, see this red line right through all this? That's what I call the 18-week average of closes, and it's often a number on a chart where a market tries to figure out what to do next. It is not uncommon that you get above it, you stall at it as you pull back sometimes, just like, let me come right here. And then you come back to that number like you did here, and you play games. You're trying to figure out what's going to happen. So what did we do? We came down last week, and we're sort of hanging there. What you don't want to see is this number, 29.51 closed under, because then you could argue that, and stay under, that would be lower highs, lower lows under the 18-week average. Got it? When we look at the chart action, you can almost see the resistance line the market's got right through here. Is this a pretty pattern? Not yet. This market's got resistance points for you that the market's failed at. When we take a look at the swing line, and what is the swing line? Let me explain that. I developed the swing line, so I wrote the study, and I know how it works, at least how it works the way that I created it. And I am looking for a pattern of lower highs, lower lows in a downtrend, higher lows, higher highs in an uptrend. This market's in an uptrend. No trend would have in some sequence a higher high and a lower low, or a lower low and then you made a higher high. And you get that in certain markets. This is a trend to the upside right now. I filter it by looking to see where is the market in relation to what I define as that line in the sand, that 18-week average. And as you can see, this market is playing at that, and it's been doing it for the past almost 3 weeks, just back and forth against that general number. In terms of Bollinger Bands, why do we look at Bollinger Bands? Because Bollinger Bands are, number one, widely followed. Number two, it's an algorithm built to give technicians an idea of what the market band it should trade in 95% of the time. The skill takes over after that because you're looking to see, do you have a tight or a wide band? I'd call this a wide band. Where's the support on pullbacks against the lower bands? You see that? The resistance against the upper band. It's that simplistic. Now, the tighter the band gets, eventually you start breaking out into a trend one way or the other, and that's why it's a 95% rule, not a 100% rule. Otherwise, you should never break out of the band. In terms of momentum, momentum had been to the downside. It's paused, but it's not pointing up. You have a trend that is up with the bias up, and until this market gets back under 28.55, at this point on this chart, this market has two of the three elements of being bullish in place. When I come to the Nasdaq, I've got, again, the market had been in a corrective mode in the momentum. It started flattening out, and it's still flat. When I look at the pattern is one of higher lows, higher highs. That is bullish. The market settled this week at 78.59, well over the 18-week average. So if the market's going to stay in here, notice something, how much narrower the bands are than when we went over here. That's number one. The resistance is 80.49. The support's back at this 18-week average. And what you don't want to take out if you're going to try for an uptrend here is to take out the break low of last week. That was 74.50. And even if you did it, you're into that Bollinger Band support zone. So this market's winding itself up for a move. That's what I'm trying to say. As we come to the Dow, just like we looked at the Nasdaq, the momentum had been down, it's flattened. The trend is up, higher lows, higher highs. The battleground for the past 2 weeks has been the 18-week average of closes in red. The market has not done anything stellar to punch through here, and even if it tries, it's got a strong resistance level at that upper Bollinger Band at the 27,559 level. While the Russell had a phenomenal week, up nearly a full percentage point, okay, it's still underneath the 100-week average. It's still underneath the 100-week being the green, the 18-week being the red. Yes, the market has divergence, and divergence is that it's got a pattern of higher lows and higher highs with this action. It's also paid great attention to the lower Bollinger Band and held it on recent tests. You can see that. If the market can rally from here, then you put into play the 18-week average, which comes in at 1535, then the 100-week at 1563. In simple English, the resistance is between 1535 to 1563. The market's bias is down, momentum is flat, and the swing line is up. In the VIX, you still have on the weekly chart a bearish bias. You've had lower highs, lower lows. You've stayed under the 18-week average now for quite a while. Momentum is still pointing down. This is still a bearish chart. You'd have to get up and over last week's highs now of 2230 to break that pattern, and at this point, the bears grab back control of this market. In the 10-year notes, we have a pattern that we've had in place, a lower low, a higher high. All of a sudden, a big correction hitting the market. Support's back at 129.04. We could say this market has made a trading top of sorts up here until it's penetrated. When we look at TLT, you have a downtrend in the swing line. You've got lower highs and you have lower lows. It's countered because prices are staying over this 18-week average in red, and as long as it does it, the bias is up, which fights what the swing line is doing. On the other hand, momentum, which often leads price, is pointing to the downside. So A test of the 18-week average could very well happen here. I throw out my bearish thoughts in the market if you take out 146.03. Barring that, could be the 18-week average. The dollar index had had a narrower band, and then it started widening out, almost like a bugle formation, making these higher highs. Now it's suddenly stalling itself. If we look at this high of that week, 99.30 and a half, this high was 99.33. So we made a pattern, came down for a lower low right through here, went back up, challenged the upper Bollinger Band area, and now we're slipping again. Should prices close under 97.25, you throw in the bearish element of this market and put into play the potential. I'm not saying it's going there for a challenge of the support at wherever that Bollinger Band and the 100-week come in. But the first thing is you've got to get through and prove you can stay under that 18-week average. Market's got a lot of divergence on it. On the weekly chart of the euro, while the daily chart looks friendly, the weekly doesn't yet. You still haven't taken out a previous high, but what you have accomplished is while you have lower highs, and I'll leave the arrows there as part of the legacy, you also have higher lows. You've gone into a stall pattern, in other words. Momentum is telling you that as it's now starting to turn up. So I have the bias down since I'm under the 18-week average. I have no trend that I can say is in place because of lower highs and higher lows. In the Mexican peso, right back to resistance at the 18-week average. Similar to the euro, I have a higher set of lows but lower highs. Again, we're in a stall pattern right here. Resistance between the 18-week average and the 100-week average. The market got a bit of a bid today because it closed over that 18-week average, but you still have the legacy that began first of lower highs. In the Canadian dollar, you know the election's now, 2 weeks away or so. I have no idea how that's going to play out, nor does the market. You had an outside week up that threw the whole chart apart. Now you've got a lower and low, higher high, battleground. If you don't see it at the 18-week average, you should stop this video. You're just playing back and forth there with nobody getting a follow-through move just yet, nor do we have a trend here. We have momentum attempting to turn up. Every time we challenge this 18-week average, we sort of fail, and we haven't moved up or down very much. Japanese yen, this is an ugly chart too. If we come back here, do you see that you had your big up week? Now you took that out. I don't know what that is. I'll stay with the attempt at a legacy of lower highs, but I don't buy into it. And that doesn't mean buying or selling the market. I don't know where we're at on this market. I just see the resistance point, support 2 levels down here. Don't know where we're at. Bitcoin. You held the first challenge of the lower Bollinger Band. The pattern has been a higher high, lower low. That is not a trending pattern. The market has hit support at these lower bands, and it's holding it. If it rallies, I'm looking for resistance back at the 18-week average, which is 10,000, just about $11,000. It'll probably be there when we reopen on Sunday night. In the Brent, we have the spread here of the differential of Brent versus WTI crude. It peaked out at near $11. It came down as low as $3.77, and it's climbing. Now, this spread got interesting news today with the attack on the Iranian tanker that was right off the coast of Saudi Arabia. The first thing the tank companies do, those that lease these, they're raising the price. I heard that today, to lease a tanker in that part of the world went to a 20-year high. Somebody's got to pay for the insurance over there. Well, as I see it, in its own funny way, that is good for our WTI crude, because if it costs that much money to get oil from Saudi Arabia, gee, maybe we're competitive to that. In any case, the Brent has gone from the upper Bollinger Band to the lower band. That's not a trend. The market's now got a lower low, higher high. Neutral ground would be the 61.95 area, the 18-week average of closes. We did the same thing in WTI. We had a higher high, lower low, and I'll repeat what I say on the daily charts. The first challenge of Bollinger Bands are often where pros take some money off the table. So if you're short, you're covering against that. If you're long, you're getting out against those up there. We are developing this sideways action. Something is going to come out of there. We did hear that OPEC is going to have a meeting in December to decide What do they do in their next phase of trying to balance the markets? When we come to rebob gasoline, we have a pattern of higher lows and higher high. However, you're under the 18-week average, which means the bias is down. So the filter says, nah, that's a bounce, but that's all it is. It's not necessarily a trend. You re-enter a bear trend phase if you take out 150, 175, because you'd have lower highs in theory, lower low, putting the 146 area in play. If you rally from here, I look for resistance at 173. In the heating oil market, the trend is up. Gee, surprise, we're going to be freezing in Chicago. We're going to be freezing now from Colorado, parts of Iowa, other parts. I wonder if the market's taking notice. Higher lows, higher highs, resistance 2080 to 201.85, support back at 189. You break this pattern if you take out 182.40 and momentum is pointing up. So, an interesting day to say the least with all this. But I'll be answering questions on Monday, and I know it's Columbus Day, but futures markets are open. So with the futures markets open, I'm going to be in the office, and my job at 6 in the morning, Monday through Friday, is to start a video recording of my charts. Have it out to you in your hands before 7 a.m. daily so that you get an idea of the morning fundamentals. What did Asia look like? What is Europe? What's the U.S. looking for on that day? What events are happening? And I'm going to cover 40 futures charts and 5 ETFs. It's a lot. The typical video is 20 minutes long, but I make it easy because I do it in the same manner each and every time, and we've built in some cool technology so you can jump if you're only interested in stock indices. It starts off, you want to know the metals. Just slide the bar on the bottom, it's going to pop up, say metals, meat markets. If that's too difficult, on the side it says what they are, this exact sequence. Just click on it, it takes you right there. You need not watch every morning 20 minutes. I want to do it because the markets tie together. And I don't know what you're interested in. So as I do this, I'm able to say the fundamentals, what I'm seeing in all the chart action, and unlike these videos, I want you to buy here. I want you to sell there. This is what I think you've got to do in the market right now. Now, do you have to do it? No. When I say you've got to do it, it's what I think the trend traders are doing. That's the better grammar, in fact. Tell me about this. How do we work it? Well, a minimum tick, as you know, in the S&Ps is not $7.95. It's more money than that. Gold is $10. Start figuring out what I've done here. I've made it to the point where for $7.95 for the first 30 days, there's no monthly, it goes on 30-day subscriptions, $7.95. If you like to stay with it, it's $15. The idea here is I'm giving you trade ideas. I want you to get confidence in what you want to do, or if you have an idea, maybe this helps tweak it. In addition, we lease out our mobile apps. They're included with this. The mobile app gives you charts, news as it's coming in. My videos, your subscriber video, will play in all my daily videos. The cool part is when I put out my subscriber videos or other things I think are important, you'll get a push notification. No need to pay for a text message. A push will come out and it's going to come on your phone just the way if you have other push notification, it'll tell you that my subscriber video is ready for you to watch. Just click that. It'll open up the app and it plays the video for you. How do you find out more? Go to our website, www.iraepstein.com. Under Research, go to Ira's Morning Subscriber video, read about it. The subscription form is right there. Should you do that, you can click up here. I'm also going to be putting out, within a week to 10 days, a regular stream of reports. Those are going to be free, and they're video reports on many of these markets to my subscribers. Other people, you're going to find it monetized. I'm Ira Epstein. You have a good day, and I will talk to you all next week.